All right, what's up, everybody? This is the first sales meeting of the 2026 of the year. I can think of no one better than Aaron Coker. I've known Aaron for, for sure over a decade,
Oh yeah,
but
at
it
least
feels
more,
like
probably
like
more than
maybe
that.
15, almost 20 years, Aaron.
Probably, yeah.
Yeah, yeah, a long
Go,
time.
go,
Over
go way
15
back.
years.
Yeah, yeah.
Yeah, and I met Aaron through business. He's a mortgage coach, and he's really helped turn a lot of other loan officers into mortgage coaches. He's always been one of those leaders by example. He did over 100 loans last year. He is a producing branch manager with about six other loan officers. Um, by the way, what is your goal for 2026, both as a
Goal is
branch
just to
manager?
kind of double up, get to 200 units, 80, 90 million, kind of back to the good old days. Not quite not the COVID good old days, but certainly just continue to build and grow. I mean, you can't stay stagnant. I've done that before, and it doesn't end well.
Got it. So producing manager, grow your branch, and
Mhm.
do 200, help 200 families with a loan. How many total cost analysis have you done over?
Oh, if I go to it tells me on the homepage here, doesn't it?
Yeah,
Three,
settings.
four, three, 4,000. I don't know what it is. A lot. Um, Too many to count. How
So
about that?
yeah,
Thousands of them.
thousands. Well, when in the second half of this call, we're going to get into some stories and strategies of how he's delivering advice with price. So let's just start with describe your team, and then let's get into the headline and why you picked today's topic and today's headline.
Yeah, so team, I've got three people on my team. I got a front end individual, Travis. Travis helps he's the quote unquote pre-approval coordinator. And then I've got Dominique, was fortunate enough to bring her back this year, and she has made all the difference in the world. She just handles the scheduling, helps just a client liaison, helps with processing as well. And then I've got a processor, Rebecca. She's the best of the best. She and I have been together for what are we in 2015 years at least, and just an absolute machine. Just can with the team I have, in the years when we were doing 300 units, I would still able to do that with this team in place with three people, and they're just the best. Absolutely.
So incredible team. And then tech stack, you use Encompass, Optimal Blue, Mortgage
Yeah,
Coach.
Encompass, OB, Mortgage Coach. I mean, Mortgage Coach, not to toot your horn, Dave, but it's the backbone. I mean, I've been using your products since I want to say, I was thinking about that this morning, 2005, maybe 2004. I remember you put a couple white papers out about working down in the OC, working with financial
Yep.
advisors, CPAs. I read those, bought the product, and have been using it ever since.
Yeah, I love that. And by the way, guys, you can Google or AI The Art of Referral by Dave Savage, and it will tell that OG story when I founded Mortgage Coach. I wanted to deliver advice with price in a highly unique, highly effective way. And it helped me become one of the top 50 loan officers in the country. And then today it's powering over 11,000 loan officers. And the goal is I got the same goal. I want to 2X it this year, 2X,
Yeah.
3X the number of people that are delivering advice with price with Mortgage Coach. So let's get into this topic. I said, you're helping kick off the year, and together we nailed this like, discipline beats desire. But what was going through your head? You knew you were going to get on this stage. Why did you want to focus on discipline?
I just feel like if you've made it this far in the industry, so let's say you've been in the industry 10 years and you made it through the last couple of years. I feel like the last 22, 23, and 24-ish were tougher than the 08, 09, 2010 years, just because back then we were able to fall back on the HARP loan. So we still had those refis that we could do, those 125 deals, whereas it almost felt like the market locked up to some degree. So without having the discipline in place to execute, you just kind of flounder. And if you don't have a plan and you don't have any goals and you don't have any directions, you're just not going to succeed. And for me, I think discipline, me personally, it doesn't work for everybody, but having that personal discipline, that internal desire, that internal drive is what creates success.
So I was going back and forth with Patrick Palmer on questions to ask you,
Hmm.
and he probably a little bit for himself. How do you prioritize your day, given that you've got four kids, a
Mhm.
branch, and a top producer? Like, what's the high level thought process of managing all that?
It is all structured. So when my day gets out of whack, I get out of whack, and I don't react well to it. So it's typically the day is, I've got two kids now that are twins that are in college. One is down at Azusa running track, doing the heptathlon, and the other one is over in New York in NYU. So it's a little calmer these days, but I've got two young ones, a 7-year-old and a 9-year-old, and they've got their activities. So that's it's just every day has a plan to it, and I need to follow that plan. So basically, getting up early in the morning, going for a walk, doing some reading, and then getting into the office at the same time every day. I don't like being there a couple minutes late because then that throws everything else off. Getting organized for the day, starting the team, having a daily team meeting. I think that's crucial. If you have a team, as a leader, you need to have that meeting on a daily basis. And we start our team meeting off where I go around the horn with the team. I ask them what they're grateful for, number one, and what their win for the day is, number two. And we all do that. So that sets us, and the reason I do that is because it sets us off in a positive mindset. And I like to joke around and make the team laugh. And I know if the processor's laughing, if the team's laughing, if they're smiling, if they're happy, we're on the right track and we're not going to uh, be bogged down by this industry because we know how deals can be more challenging these days, but we just gotta, power through it. And then from there, it's just go throughout the day, whatever the day calls for. That's what I do. Each day kind of has a theme to it. And I will say been a godsend having Dominique back because I don't have to deal with scheduling my clients. She just handles it all and they pop up on my calendar. And then I jump in the Teams meetings. I do the Teams meetings and then typically come home, get my workouts in, depending on the day of the week, and then my kids shuffling from point A to point B, getting dinner ready, whatever it may be, go to bed, rinse, repeat. That's all it is. Just it's
So
like
you actually get your workout at the end of the day, end of your workday.
yeah,
That's part of
I
your
kind of
transition.
it depends on what I'm doing. For a while I would do it in the morning, but just with what I'm doing right now, it's easier for me to do it in the afternoon just because of the program that I'm doing. It's hard to push a lot of weight when you're first thing in the morning. I mean, it's really hard to get motivated, man. I'm not gonna lie, but I don't miss workouts. I mean, I could probably count on my hand over the last 5, 6 years, two, three, four workouts maybe, just because I don't want to. And I always force myself to do it, even though I don't want to. And I think that's the key thing where discipline comes into play, where I force myself to do it, even though I don't want to. And that same thing applies to work. I force myself to do the things that I don't want to do. I force myself to get uncomfortable, whether it be sauna, cold tub, over here, and doing those things that other people don't want to do because they're hard, right? Hard is not
Yeah.
easy, but hard creates results.
Look, amen to that, brother. So remember, guys, this is a mastermind. We've got 50-ish people live. If you've got questions, put those in chat. We'll have time to get to them. And then for those of you that are watching this on YouTube, any links that we mentioned will be down below in housing.link. There'll be one housing.link, and then all the other links will be in there. So be sure to check that out. So I'm writing a book this year called Savage Code, and your code is your beliefs, your philosophies, your mantras. One of my mantras, even before Todd Bookspan came up with win by noon, I always had that in my head. I got to win by noon. And to
Hmm.
win by noon, I needed to win by 7 in the morning, which was like personal rhythm stuff.
Hmm.
And when I was an operator and originator, it was I had to get my prospecting in. I had to do that. What are some of your mantras, philosophies, and and by the way, is winning by noon one of them?
Not necessarily, but I will say that get the hard things done first. We've all heard eat the frog, eat the frog. Get the hard stuff out of the way because your mind's
So
going to be
that's part of
sharpest.
your code. Eat the frog. Like you are
Yeah, yeah,
saying that to yourself.
yeah. Your mind's going to be sharpest earlier in the day, and that's why you want to get the prospecting done earlier in the day as opposed to later in the day. I mean, I know I talk to my wife this. I don't talk about work at all when I'm home, and I don't talk much when I'm home as it is, just because when I've got a day where I'm talking all day long to clients and you come home, it's talking is exhausting. I mean, it takes its toll on you, even though you don't think it, but it does take it out of you. So if you're doing a lot of that prospecting earlier in the day, and then you can kind of get the busy work done later in the day, I think that's kind of important. And for me, you talked about, pillars and and things that are important and mantras. One thing I like to say is how you do anything is how you do everything. I don't know where I got that or who said that, but it's certainly true. So whether it be taking the garbage cans out to the curb and having them lined up properly, or making the bed every morning, or putting the dish. I don't use a dishwasher. I wash dishes by hand and I put them in the dishwasher to dry. I just don't like messes. I like things orderly and clean. But again, it's just doing things, I guess, in my mind, with precision and accuracy and order. I think order is a key thing in my life. Having order is very important.
Love it. Hey, by the way, you've probably, as a branch manager, you've had loan officers ask you what's the best way to learn it. Mark Dowling just put a text. I just started Mortgage Coach. Some of the numbers. Wait, I'm not getting the numbers I want. What's the best way to learn to create a TCA? Any advice for him?
I mean, trial by error. That's kind of what the way I've learned it, and I'll show this to you later on. I really like to simplify things. Simple is better, and I think simple is also better for the client. There's a lot of bells and whistles and things that you can do with Mortgage Coach, but I found that just the simplest approach, the most straightforward approach, and again, with accuracy. So if I'm putting together a total cost analysis, my numbers are going to be accurate. I'm pulling the correct title fees. I'm getting the accurate property taxes. I'm getting loan amounts, I'm getting rates, I'm getting fees, I'm getting all that in there, so there's no surprises. And one of the things that kind of the mantra for our team is speed, accuracy, and communication. Okay, so if we talk about accuracy, when you look at accuracy, that's where Mortgage Coach comes into play. So I'm not going to be. I know there's people who use it and just kind of throw the numbers in and as a template, a 30,000 foot view. I like to have that one foot view. Okay, this is what you can expect based on all the data that I have available to me, and over time, it's simple. It's simple. It's just like anything. I learned to ride a bike. It's hard at first, but it's just the more you do it, the easier it gets.
Yeah, agreed with all that. Mark, I did give you a couple links just to help you out a little bit. The 10X link is just kind of all the things that I'm doing. I mean, first of all, coming to these YouTube videos, I am for the entire year of 2026, this Tuesday call is going to just be sales meeting. This is the weekly Mortgage Coach sales meeting. If you want to be the best AI powered mortgage advisor, come here. I'm always going to have what I think are a couple of the best videos to watch right now. Like I'm doing an interview like this every week, but I'm always going to have like, what's one in this quarter you should watch? And I still have this one, refis and realtors, because we're still kind of like, refis are an opportunity, realtors are the core business. And then there is daily training available. There's videos that you can watch. Like if you go to this page, it will have everything. Like if you click on the daily training, it will take you into that training page and into all this content. And anyways, hopefully that helps you. All right. So I'd asked this when we were kind of prepping before we went live. Was there a time where you went from regular person to this high performer? And I do know that discipline is your superpower because I talked to a couple different people that you know personally, and I said, I'm interviewing you. What's his superpower? What makes Aaron super special? And they all said his discipline is just insane. Like his
Mhm.
health protocols, his family protocols, his business protocols, like, discipline's your superpower. So were you just born with that or did it evolve or,
I think it was evolved. I mean, it's nurture versus nature. Probably somewhat of how I was raised. I think that comes into play. But I think you asked that, and I'm thinking back here. Okay, one thing that I was fortunate enough to play football in college, and I remember a coach in high school described me as a gym rat, just always wanting to be doing whatever I could to get on the field, get on the court, whatever it may be, and just if you love something, you're going to pour yourself into it, right? So if I love doing loans, I mean, who loves doing loans? You love making the money that the loans provide, right? But if you love being able to provide for your family and being able to provide for other families, you're going to pour yourself into it. If you love being healthy and fit, you're going to pour yourself into it. And it's just, it's you got to want it, right? I can't force. I mean, I've had calls with our groups and I said, hey man, if you anybody wants just a little workout program, I'm happy to help you. I'm sincerely, I would love to help. All right. But that's hard, right? And that's also accountability. So, holding yourself personally accountable, I don't think everybody can do it. It's just something that it's just, if you want something, if you want to find a way to get out in the field, if you want to find a way to be the best, you've got to do a little bit more than everybody else. You got to get up, you got to get out of bed, you got to show up to work, you got to put a suit on, you got to put a tie on, you got to do all those things. I mean, I'm at home right now because we're in the throes of moving offices, and I have no place to be except my basement right now, unfortunately.
Right on.
I like being in the office. I don't like it at
Yeah.
home.
Well, I definitely, as I've studied success, my own personal journey, and whenever I changed, and I don't want to just say a bad habit, but I changed, like there was a better way to do something than the way I was doing it.
Hmm.
It so much of it
Yeah.
came down to the why, rewiring my brain around the
Yeah.
why, documenting it. I mean, even when I adopt a new piece of technology, I'll go through the process of like, why am I doing this? Why is this important? What is this going to give me that I don't have now? So that that why is critical. Do you have anything like that that you do? Because you've adopted a lot of best practices in your
Well,
mortgage
yeah, I
practice.
mean, I just thinking about evolving. I mean, there's a friend of mine on this call, Ryan McCracken, and I can remember being at an event, I want to say a sales mastery event in Palm Springs when Twitter was kind of a first, what was a thing, maybe early 2010, 11, 12, somewhere around there. And I said, I'm never going to be on Twitter. I'm never going to look at Twitter. I'm never going to do that. And lo and behold, I'm on Twitter all the time, right? And then even just with fitness and in health or mortgage coach or business, Chat GPT, using Chat GPT to help do some of the marketing pieces that I put out on a weekly basis, just using what's available technology to evolve your practice and become more efficient and become more accurate, do things quicker and become better at what you do. I mean, absolutely. You can't stay stagnant. If I did the same thing I did 15 years ago, we wouldn't be having this call today because, you wouldn't want to talk to me. I would have nothing to offer.
It's true.
Yeah.
It's true. I mean, who I interview are people that are creating results.
Hmm.
I try to make it like the uncommon LO is someone who's winning financially and doing it in a way that's future proof. And
Hmm.
you check all those boxes. I mean, you're delivering advice with price, you're using social media, you're leveraging technology, every way that you can. Um, when you think of your strategies, you said you want to 2x your business. Like, what are the things you're either going to stop doing and start doing, or what are the things you're going to do more of? Like, I asked this question of Sean Herrero a couple of
Hmm.
weeks ago because
Sean, good guy.
he wants to go from I don't know 130 million to 300 million. And I'm like, okay, bro, like, what are you going to do? How are you going to do
Hmm.
that? How
Yeah.
are you going to 2x your business?
Yeah. So it comes down to I guess it's the how do I want to describe this? I'm trying to think of what the term is. Just leveraging yourself properly, right? So I can have multiple realtor meetings, multiple individual phone calls with realtors, and that may move the needle, but it's going to be tiring. It's going to be time consumptive. So it's getting more people in a room, getting more agents in a room, delivering a message to an agent, helping an agent understand how to be better at what they do, not showing up, not selling. I mean, who likes to cold call? I mean, nobody in here likes to cold call. If you do, you're lying. I'm just telling you that right now. All right, nobody likes to cold call. So, leveraging existing relationships to create new relationships and just helping people, just helping. I mean, becoming a servant. I talk about that a lot with our group. Is be a servant to your clients. You're not going to be able to help every client, and clients are going to go elsewhere, and that's okay. Okay, and just if they if a client wants to work with somebody else for whatever reason it may be, I'm still here as a resource to help those clients. And it's funny, I think we've all had this happen to us. It was when you've had a client say, I decided to go here, but if anything comes up, I'll be sure to refer you and send anybody your way. You're like, yeah, whatever. But I know actually we've had that happen recently where a client didn't work with us, but we actually got a referral from that client that ended up becoming a deal. So that's where you're serving. You never leave a relationship on a bad note. You're positive, you're upbeat, you're just there to help. And if you have that mentality, I treat a $50,000 loan the same way as I treat a $900,000 loan or $1 million loan. Everybody gets the same level of service from us, whether it be the agents or the client.
By the way, that's one of the things Jeremy brought up last week. He was my last guest, him and Hunter Markwart, for
Oh,
2025. And it
yeah,
was one of the five traits loan officers need. And it was weird because he said a borrower presentation at a high level of consistency was something that needed to go to another level in
yeah,
2026.
yep.
And he had a whole case to be made around that. So, guys, before I ask the next question, I do in chat want to know, like, you're on this call. It's a sales meeting. What, how much more do you want to do in production next year? So Aaron already said 2x. He wants to double his business from 100-ish loans to 200-ish loans. If it's 20%, I just want to get a sense for are people on this call, like, what's your goal? Like, where do you want to take it from 2025 to 2026? So Cass is like 25% more, Mike, 25%, 25%. So by the way, that's like a trend, 25%, 43% and working the same hours, right on, Cody. Um, so I mean, it sounds like we got a lot of people that have done well that just want to we got a 3Xer. 3x, oh, 5x. Okay, 5x beats 3x. Uh, so Aaron, if you to 2x, like Sean literally broke it down to three activities that he needs to do more of.
Hmm.
What are two or three? Or by the way, is there a new thing that you're going to do in 2026? If there is, we want to know what it is. But what are the
Hmm.
top three activities that you need to do in order to 2x?
Top three activities. So I have a big database, and I've been fortunate enough to been in this business for 25 years or something ridiculous. So continuing to be available for my database, continuing to produce the newsletter that I produce on a weekly basis to my database. I mean, you never know who you're touching with it, and but from time to time, I will get feedback from clients just saying, "Hey, I love it. Keep it up. Thank you so much." Or a buddy of mine will always say, you got me with that subject line. Great one. You got me to open it up and read it. So that's always getting that positive feedback. And then just expanding that realtor network. That's the key thing. I mean, the refis with having a database, the refis are going to be there, and we're primed and ready to go when we do see a little bit of a rate drop. I got Travis tasked with that so we can manage that piece of the business. But just expanding the realtor relationships and growing that part of the business because there's plenty of business out there, and a lot of times I find that people they go after that shiny thing, like I'm going to be the expert on reverse mortgages or I'm going to be the expert on reno loans, and I'm just saying that's a waste of time, right? I mean, look at all the top producers. I mean, you can do it if you want, but how much time is that going to take? And look at all the top producers across the industry. They're focusing on vanilla. Vanilla is what pays the bills. Vanilla is what puts money in your bank account. Vanilla is the way to go. And I see Cody's comment here about a 43% increase in working the same hours. I mean, that's easy. I mean, the same hours piece, because think about how much time, and I'm guilty of this as well, about how much time during the day we waste doing nothing. When if we were to spend every minute that we're in the office, it's hard, it's challenging, it's not easy. But if we were to spend all the time that we have, all of our working hours actually working, all right, versus all of our working hours and compare that to how much we actually work during those working hours. If you're efficient and you're focused and you have a task every day, what I do when I come in the office, I print out my calendar and I have my calendar in front of me. And then we have our team meeting. I mentioned that, and I just take my notes on team meetings normally at 9 o'clock. So we're not having I'm missed the team meeting today, but I take my notes as to what I have to accomplish today. And I find that when I write the things down that I have to accomplish, I can just go through that list and cross them off. And that's for me, what helps create more efficiency.
Keep the
Uh,
questions going.
yeah.
Kathy wanted to know newsletter.
Yeah.
What write about?
So the newsletter, it's called Coker's Consumer Cliff Notes, and I kind of created a banner on Canva. It looks like Cliff Notes if you're our age, you know what Cliff Notes are. I think they've got something else for the kids these days. It's blue and black, or I don't know what they call them. But so it's a lot of it's finance related, and I'll just kind of read other stuff that comes across my desk, and then I'll just go into Chat GPT and I'll just start typing away. This is what I want to write about. Let's focus on this. Put a paragraph in there, and then Chat will spit out the content. I'll kind of curate it to some degree, and then go into Mailchimp and tighten it all up, and then get it sent out. But yeah, it's across the board. I mean, it can be health from time to time. It can be having just a positive outlook. I think I got some positive feedback on the one I did on Thanksgiving. Just loving people, being kind, being generous to others. So yeah, it's across the board. I think last week I did a year in review. That was an easy one because I just took the previous year's year in review and I just cut and pasted and I said, hey, just update this, and then add in a couple more pieces. So again, that's where efficiency comes into play, right? I mean, I when I first started doing this, how am I going to write? I committed to doing a newsletter. I'm like, how the heck am I going to write a newsletter? I mean, that's hard, right? To sit down and actually pen a newsletter from start to finish. But yeah, using the chats the way to go in my opinion. And get rid of the M dashes, EM dashes. That's a sure sign that it's Chat GPT. So if you are using chat and you are writing a newsletter and putting that together, just say remove all EM dashes, M dashes, and it'll pull all the M dashes out. And that's that line that they put in between sections of words.
Yeah, make sure it doesn't look like AI. And by the way, guys, that is a spectacular idea this year. And I'm going to
Yep.
list off reasons. One, Aaron's going to just be better. I mean, if you're going to take the time to consume, what should I share, and share it, he's going to be better in every conversation he has, whether it's a partner or a realtor. So it's doing something, I would just say it's a personal improvement. And then two, it's putting out authentic content at scale. It's not a template that thousands of other loan officers are doing. It's something that's unique. It's authentic. Number three, guys, uh, by the end of 2026, most customers are going to be AI powered. And I'm already hearing reports where loan officers are finding loan officers on AI, and they're definitely using AI as part of the home shopping or mortgage experience. And you know where AI, when they put in questions and answers, you know where they get it? From blogs, from
Hmm.
newsletters. So the
Hmm.
only thing I would say is like, don't just have it in a newsletter. Make sure that you're putting that on a blog somewhere,
Yeah.
so that AI can scrape it. Because we've got to, and then the other suggestion, I don't know if you're doing this, Aaron, but stories, stories of how a customer came to you thinking this,
Yep.
you gave them advice with price,
Yep.
and you either saved them money, you changed their paradigm, but like,
Yeah, we do that
don't
too.
go.
The social
So
proof.
you do that already. You're
Yeah, yeah.
telling.
And then yeah, Karen mentioned here the realtors. Oh, yeah, I also have one for realtors that I do. It's called the real estate rundown. Same type of thing. Just come up with a topic, throw it in there for realtors. And it's pretty good about on average 47 to 50% open rate on the emails. So I'll take that. That's a pretty good open rate.
So
Um,
one thing I want to ask you, because Jeremy brought this up when it was like Jeremy had two things that he is going to do more of in 2026. And he said, I've been doing a lot more non-QM loans,
oh yeah,
and I
I do a
want to
lot.
do more non-QM in 2026. And I've heard that come up from a lot of folks.
Hmm.
Uh, Obviously, you had said, hey, I want to focus on vanilla, but what's your take on how you're going to prioritize non-QM and how loan officers should prioritize that?
Yeah, I mean, if you're not doing non-QM loans, you're missing the boat. Right now, we're doing a lot of fixed second mortgages, and for various reasons, I can think of one right now that we just did recently. It was a bit of a challenge. The client was challenging. He didn't want to. He was using Gemini to explain to me his situation, and I was using the actual uh, documents from the county website to explain the situation, but he kept going back to Gemini. We ended up doing a bank statement second mortgage on a primary residence, got him the money he needed to do what he needed to do. I mean, we're doing the asset depletion. We have another one funding today. Client needs a second mortgage to pay back a margin loan, so we're using the other assets she has in her Schwab account uh, with it's a full doc loan, which is great because she has an IRA distribution that we set up, and then we're using with our non-QM product, the IRA distribution creates a full doc loan, but then we can take the remaining assets in the Schwab account and divide that by 84 to create an additional income stream. And yeah, so if you're not doing non-QM, if you're not learning it, how to do it, and not utilizing it, fortunately for us at Cross Country Mortgage, we don't have to broker anything out. We have everything under the sun. And I think on a lot of our non-QM stuff, we're given exceptions on about 40 to 45% of the product that we put into the system. So I don't say that necessarily market for it, but I do talk about it when talking to agents and things that we can do to help clients, whether it be the bank statements or asset depletion. Yeah, I mean, we do. Yeah, we did two or three last month, non-QM.
Yeah. So two things. So audience, what percentage of your loans are non-QM? I really want to know because I am seeing this as a bigger trend. And I think it makes sense not only for loans now, but when it comes to future-proofing your career. Let's face it, the most easy loan for AI and technology to do is a vanilla rate and term refi. Like you're gonna compete with the machine for those. But what are the two loans that you're least likely to compete with the machine? First time home buyers and non-QM. So I just can't emphasize enough, if you are a local referral-based mortgage professional, you should just crush it. You should just be like the non-QM leader.
Yeah, I
Um,
think we had four last month, four non-QM deals
or
last month. Yeah.
or okay. Karen said not enough. So by the way, audience, would love to get a little more feedback. It's 15% of my business. Okay. Thank you, Tammy. Keep it coming, guys. Would love to know what percent. So let's transition because the other thing Jeremy said, like an amazing borrower experience. I want to hear the checklist of the Aaron Coker borrower experience, and then I want you to share a story and a strategy of how that experience is winning right now in this market.
Yeah, so I keep it very simple. Again, my process is I want to meet with the client before they set up an online account. I don't call it an application. I call it set up your online account. I think that's softer language when saying because the application is a little harder. Like, hey, you're applying for a loan. I don't. I call it online account. That's what I've taught my team to do, and that's what I use. So our process. Usually the client will email. I've kind of trained my agents to either have them email have the client reach out via email or sometimes via my Ring Central text number. I'll have my team schedule the appointment. I'll pop into the Teams meeting, and it's the same process every single time. I kind of follow the forward script initially. So, family, occupation, recreation, dreams when you're talking to the client. So, learn about their family. What do they do? What do you do for fun? Just have a conversation and be a listener. I think too often we want to show up and throw up. So, I listen and I find clues where I can become more personable with the client and just kind of deepen that initial relationship. And then I find the point to transition into the sales presentation. And the sales presentation, I got this from Brandon Knapp. He's a former coworker. I think he's at Cross Country Mortgage now. But the sales presentation, it's very simple. I tell the client there's three things we look at when it comes to qualifying. Number one, we're going to look at your income. Number two, we're going to look at your assets. Your assets for the purpose of a purchase transaction are going to be your down payment. And number three, we're going to look at your credit. Now, the combination of those three items will more or less dictate what we can and can't do. And I tend to take more of a pessimistic or glass half empty approach when qualifying my clients because I want to make sure when you're out there shopping for a home, you've got nothing to worry about. We do all of our due diligence and heavy lifting today. So that's exactly what I say. All right. So then I get information on the income. Okay. What do they do for work? I get information on where the money is coming from for the down payment. So is it a gift? Where is it money market? Where's the money being held? Just kind of do some initial deep dive digging so I can figure out how to structure this thing. And they get a general idea on the credit. And I tell them once I talk about credit, we're going to do a soft pull initially on your credit. That's going to pull 2 out of 3 credit scores. That's not going to negatively impact your credit. So I just want you to know that, but we will do a soft pull. We'll get to that here later in the process. And then from there, and it's always three things, right? Three things. I transition into there's three main categories of loans. Not all three are going to be applicable to you, but I want to make sure you understand what is out there in the marketplace. So number one, we have jumbo loans. Jumbo loans in this market are any loan that's basically greater than $833,000. So really not applicable to your situation. Next, we have government loans. Government loans are broken down into three. There's that three again. Three subcategories: FHA, USDA, and VA. And I asked, I said, are you either of you a veteran of the U.S. military? No. Okay, we'll move on. USDA, probably not going to work for you because you're not looking to buy in a rural area. Great loan, but you have to be the perfect square peg to fit in that square hole. They're very hard to qualify for, and that, especially in this marketplace. It is a good loan with a zero down payment, but there are a lot of restrictions. And then FHA, a lot of times people think, I want an FHA loan. I say, no, you don't. They think I'm a first-time home buyer. And then I explain where FHA comes into play. I say, hey, you have an 800 credit score. Let's say let's say you have an 800 credit score. I've got a 620 credit score. I really don't have a 620 credit score. Ha ha ha. And then, but the thing is, we will both get the exact same terms on our loan. So long story short, FHA does not discriminate based on credit score when it comes to loans, but it is a great way to go, 3.5% down, and the guidelines are a little bit more lenient. That brings us lastly to conventional loans. And conventional loans are broken down into two subcategories. You probably heard the terms Fannie Mae or Freddie Mac over the years, though there's the two big entities that we use their guidelines to underwrite our loans. You don't have to put 20% down. If you're a first-time home buyer, the minimum down payment is 3% down. You will have to have mortgage insurance if you don't have 20% down. However, with the premiums on mortgage insurance and depending on where your credit scores are, the cost of that mortgage insurance isn't overly expensive. And then we just dive into, okay, typically I know what route we're going to go even before I go through the three loan programs. And then we take a little bit of a deeper dive. And then from there, I will ask them, what questions do you have for me? Not, do you have any questions? Because I got that from, I don't know, my bag's upstairs. Phil, what's his name? Phil, the British guy, glasses. You know what I'm talking about, Dave? You're muted. Phil Jones, Phil.
Phil M. Jones, the author of Exactly What
Yeah,
to Say.
yeah, that guy. Yeah. So, what questions do you have for me? And nine times out of 10, you did a great job. You answered all my questions. I go, great. Okay, so here's the next step. So, what I need you to do, I'm going to send you a link right now. The subject of the email is going to be getting started. Just follow the directions in that email, and you're going to set up your online account. So, once you set up your online account, I'll be notified. Once you finish setting up your online account, I'll be notified, and that'll be the trigger for me and my team to jump in there and do that soft pull on your credit report. I'll send you a text message with your credit scores so you can see what they are. And then from there, I want to ask if you could send me just one or two properties that you're interested in, not something that you're necessarily going to buy today, but properties that check the box. And then what I'll do is I'll prepare an analysis for you, send out another email with a link. TCA analysis will be in that link. And then we'll just jump back on the phone and I'll walk you through the data. Boom, that's it. Every single time. Same thing.
What
Every time.
percentage of that experience is over Zoom or just the phone or in person?
I would say not in person. I would say 90% is Zoom. And I like to have the Zoom or the Teams meeting because you can actually create a connection to some degree, whereas over the phone, you don't have that eye to eye. You can't see, the voice inflection. I mean, all that stuff. I mean, Zoom or Teams is the way to go. And if you're not recording a video for your TCAs, you're missing the boat. Okay. There's no reason whatsoever to not record a video with your TCAs. None whatsoever. None.
All right. So, guys, I'm going to put two bullet points. I just wrote down some coaching notes. So, number one, and looks like I have some spelling errors. Here, let me fix those real quick. Gotta love AI and spell check. So, number one, have a conversation and listen for opportunities to connect personally to solve their problems and concerns. And then I know Aaron, and then to help them achieve financial freedom faster because of his advice. Like those are like that. And by the way, that's not the typical LO. Like the typical LO does the first. They listen to basically, come up with transactionally qualify them. I mean, at the end of the day, what does the normal LO do? They ask questions to transactionally qualify them. Like that is what the normal LO does. And then this is what Aaron does. This is what he said. And guys, this is how you win in the coming year is you do what I'm going to put next here. Let me fix the spelling errors. Think I got them all? Three things. He delivers a digital AI powered presentation, Mortgage Coach, with a video that connects. He shows them that he knows them. It solves their problems and concerns and helps them achieve financial freedom faster and sooner. Like that's it.
Yeah.
What
Yeah.
did I miss anything from those little cut and paste?
No, I mean it's be a listener. Okay. Don't be a talker. Be a listener. Okay. Listen to your clients. You're going to have an opportunity to talk, but listen, ask questions, listen, ask questions, take notes, listen. And there's a question here. I do not record my teams meetings. I just take copious amounts of notes, and I've got a kind of a system on a piece of paper where I know where to write everything down. And
But
I'm
by the way,
always in this.
a
Go
lot
ahead.
of loan officers do, and so I will add it as a best practice. I know Jeremy can't remember the platform he uses. I use Otter. Uh,
Otter AI. Yeah.
yeah, and then
Good idea.
Jeremy uses Plod. And I know a lot of other top producers doing that. So I do recommend it because here's what I love about it, especially in Otter, it's recording. I can then go back and have a conversation with it. And I could do everything from what were the key takeaways. I can ask it what was the overall attitude of the person I was talking to, and any coaching. Like you could literally you could one of the other things I do because I like to use I'm a big guy on challenger sales process. I can ask it, hey, review this transcript using the principles from the book The Challenger Sale. Is there anything I could have done or could have said better? So you can, do some sales coaching around it.
Hmm.
Obviously, it's a great takeaway to give to the consumer. And then one other idea, Aaron, is if there was something in it, like quotes or memes, I'll ask it, hey, were there any things that would make a good social media post or any quotes in it that would make good social media memes? And it will literally, there'll be phrases and it will just, I would just push people to start recording, transcribing for all the
Yeah, I
reasons I
do.
just listed.
That's a good idea because I know Teams has that ability to give you a summary of the key takeaways. So that's something I will start doing. And one thing I didn't point out is I'm always, with the exception of Fridays, I'm always in a suit and tie when I'm doing these meetings with the clients. So again, showing up, being professional, I just think that lends another air of confidence in the clients' minds.
Yeah, yeah. All right, well, let's do a strategy. Let's show one of your
Yeah.
digital AI powered presentations with a video and do a little coaching session. And guys, if you
Yep.
have questions, I'm gonna have one more chance to come back and do some Q&A if
And
anybody
then
has a question.
yeah, Ryan had a question here about what tech is good for video TCA. It's embedded in the software, so you don't have to worry about that.
Maybe show
Uh,
how you do that real quick. When you
yep,
show a TCA, maybe you could show them how you do it.
yep, absolutely. Yeah, everything is over Teams, not phone. How do you come up with your fees on purchase transactions? What are you referring to that, Mark? How do you come up with your fees specifically on purchase transactions? I think what if I look at uh, I think I can answer that question here with what I'm going to show you guys. So,
Yeah. And a couple things for all you mortgage coaches. If you are with a company that has an enterprise partnership and we're integrated, like in the case of cross country, we're integrated into Encompass, Smart Fees, Optimal Blue. So literally, Mortgage Coach is like a fast and easy way to price a loan. And if you're not, you can still do it manually. Might take an extra minute or two. Um, but just reminder to everyone, if you have the Encompass integration, you're not using it, you should.
Yeah. All right. So, share. Let's go. Let's share this right here. All right. So, can you see this?
Yep.
Let me bring it over
Oh,
here. So,
3,000. By the way, guys, look at that. He's created that left number is 3,402 TCAs. He's put videos on 2,020 of those, and they've been viewed 22,804, which is approximately, what is that, seven times? So
Yeah, that's about right. Yeah, yeah.
yeah, so I want you to think about this when he shows this total cost analysis, this digital presentation, it's been viewed 22,000 times. And so if you're not delivering a digital AI-enabled presentation, you are just complete disadvantage into 2026 and beyond.
Yeah.
And if it's not AI enabled and consumers are AI enabled, I mean you're putting yourself at a massive disadvantage.
Yeah. All right. So the first thing I would encourage anyone to do if you haven't done this already is go to your settings and then set up your fee templates. That's really the only thing I use here. I don't use product templates, although there is one for FHA, but I just use fee templates. So for us, and the reason you do templates is because when you choose your template when creating a TCA, you only have to change a couple of variables, at least in Oregon and Washington and the states we work in, California. But if it's a purchase template, I've got all my fees in here, just rough estimates, lender fee, credit report. That's kind of a bummer that went up. Appraisals, flood cert, all that. So all I have to do is put title insurance in there and the escrow fee. And then on a refi, all I have to do is add title insurance. So I don't have to go through and create all this information every single time. I just have to update one variable after I've chosen the fee template. So what I want to do is show you kind of what I do when it comes to creating these. So I took, for starters, this is kind of the purchase. I want to show you a purchase one. So I mentioned I asked the client to send over a couple properties they're interested in. So in this case, Homer and Marge sent me four. I just copied and pasted another one, but I wanted to keep the personal information off of here. But this client sent me four properties. So I just create four scenarios for the property. So we pull the purchase price, we look at the loan amount based on what they were sharing. We were looking at a physician loan in this case. And I do this for all three scenarios. Now you'll notice here what I have highlighted, right? I highlight the payment and the cash to close because those are the two things that people are most concerned with in most cases, when it comes to purchasing a house. So I want their eyes to focus on the payment and what's the cash to close. So this is what initially a client would see for a purchase transaction. It may only be two properties, it might be three properties, it might be one property. All right. But this just gives them an idea to get the juices flowing on what to expect. We did end up doing a physician loan on this particular property right here. But the payment, I'll record a video. And somebody had a question about video. I don't have it on here. Let me do this real quick.
Yeah,
Okay.
and oh,
I'll show you a real Homer Simpson. So record a
keep
video. Do you want me to?
keep put
Do you,
yeah, go for it. And
yes,
do a mock, almost like let's get a script for how you would do this video,
yes.
whether you actually record it or not.
So when I'm setting this up, I'm just going to input the data here. Okay. Closing costs I mentioned. I just click on closing cost details. I choose the template. Boom, purchase. I'm not going to choose it because that'll overwrite everything that I have in here. I put in whatever the cost to lock is, approximate prepaid interest, and then taxes. I get the accurate number for property taxes, insurance, collect the correct amount down here in the escrow section, and I do that across the board for all four scenarios. And when I say I have Travis as my right-hand man, so he does a lot of this for me. But I still call him Grasshopper. We go back and forth about it, who's the better at it, and I'm still the master when it comes to these. So we go preview, and then it generates a link from here, and you can put the quote date in right there. And you generate your link, boom, add audio and video, and you just click in web browser, and then you got
And
this
by
little
the
guy
way, if
right.
you clicked mobile and you have your mobile connected, it will pop up in your mobile phone. And I do like that just because the audio and camera on your mobile phone is usually a little slicker than your
Mhm.
desktop, and you can
Yeah,
control the background. So, like if you
yeah,
wanted to put a camera here, put it there. If you wanted to stand up somewhere.
yeah.
So, anyways, just consider that, everyone.
I would recommend having a separate microphone and camera, independent of your laptop or your whatever you're using for your setup. But I can't actually record. But if I were to record, I would click on this, boom, click record. Hey, Homer Marge, Aaron here, Cross Country Mortgage. As promised, here's a quick summary of the four properties you shared my way. You can see I've highlighted the monthly payment. That payment includes taxes and insurance, and then the approximate cash to close in each scenario. take a look. Let's jump back on the phone and I'll walk you through the data. Okay, so I'm creating a call to action with the client. I don't want them digging in here to figure out what the heck is going on. That's my job. And then once you record the video, you stop it. It'll ask you if you want to upload it. You upload it. And then from there, you can click share. That creates a link. And then we have a video. We have an email on my desktop. We use the same email every time. Just double click on the email, put the client's name in the email, paste the link, and send that to the client. And then I'll sometimes follow up, depending on the client, with a text message saying, "Hey, did you get I'm sending the email with the analysis. Let's jump on the phone." Okay. And then I'll walk the client through the data. So I want to be the one controlling the experience. And then when the client clicks on the link, if you're not aware of this, they will see on their screen what I see on my screen and what I'm doing on my screen. So as I make changes and walk through the data and show them what's going on, uh, they'll see all that. And I primarily focus on this box right here and the more info. So I go more info, I can break down the payment, taxes, insurance, so on and so forth, and then go through the closing costs. This is a high level view. Then we click on fee detail to break it all down for the client. So that's kind of how you create a TCA, and always record a video. Nobody cares what you look like. Nobody's going to judge you on how you look on camera. You're only going to judge yourself. Nobody cares. I promise you that. So I would just say always record a video when you're doing these for your clients. So that's kind of how we set up a purchase transaction initially. Once we have it fine-tuned and they have a property that they're going to make an offer on in earnest, we will go in here and I will put that specific property. I will update the data on the total cost analysis to match their sales price and their down payment. And then from there, I will remove all other presentations. And I gotta click forward. And then you'll see that now there's only this presentation that's left. So then we can jump back to this same dedicated link for the client, and I can walk them through the specifics on this offer they're going to be making, and then we'll update it one more time once we've locked the loan for the client. So that's how we do it on purchases. So initially it's a broad view, and then we narrow the focus down once they find a property. And you can see here I don't have a lot of I don't like to give them options, too many options. I want to simplify things for the client. So it's usually one or two options for the client, because if they see all this data in front of the screen, the eyes are going to glaze over a little bit. Okay. So let's look at a refi. I think this is where Mortgage Coach really is going to shine for you moving forward, and where it's helped us close hundreds and hundreds of loans. So in this particular situation, the client was contemplating, he owns a property here in this neck of the woods. He's buying a house down on the coast in Oregon, and he was looking at either financing the house or using his house up here and paying cash for it. And we determined that paying cash for the property was going to give him the best opportunity to win the deal. And we closed this. It was a cash out refi with an appraisal. We closed it in 2 weeks, and I was very impressed with the way the team moved and how quickly we were able to get this done. But in this case, what we looked at is we kind of looked at this guy's an engineer, an Intel guy. So we did go a little bit deeper with him, but we looked at three scenarios. So we had when the appraisal came back, it came back at 754. He was thinking it was going to be a little bit more. So that pushed the loan to value above 70%, which is going to, as we know, bump the rate up a little bit. Whoops. And then we also compared that with, okay, let's say we keep the loan to value equal to 70%. How much cash out are you going to get? He wanted to get 450. And then let's just say if we reduce that even further to 375,000, okay, what's that going to look like? So again, you notice, what do I have highlighted here? I don't have any of this stuff up here highlighted. All right, I have the payment and the cash out or the cash to close is always going to be the things that I have highlighted in my analysis. So again, we just go through the numbers, show him what's going on behind the scenes. There's no escrow account on this one, so pretty simple. Principal and interest payment, closing costs. Again, he was okay paying a little bit more for that greater than 70% LTV cash out scenario. It made sense for him. And again, we just walk through the details, and pretty simple. So again, everything is simple. I simplify it for the client. I don't want to overcomplicate it. Moving on to the next one here. Lastly, this one, oh yeah, this one is a debt consolidation. Okay. So again, you look at really, it's only one scenario here. Again, one scenario or two at the most, but this is just one, and then 1A. So typically when you're doing a refinance, you're going to do a comparative analysis where you're comparing it to their current loan. So this is the current loan. You can see they owe very little on the mortgage, But notice how the payment's considerably higher here. There's no way the mortgage payment's going to be that high on a $116,000 loan amount at 4.25%. So because we're doing a debt consolidation, what we do is we take the debts that are being paid off and we apply them under this other box that you have access to. So if you go back to I'm back here. This is which one was this? This was John, right? This one right here. If I go here, when I'm setting up the assumptions, so goals, lower interest rate, or you can call it, if you're doing a refinance, you can either call it lower interest rate or pay off debt or whatever you want. We just call it lower interest rate. Um, Monthly cost. This is where you put in the current insurance and the current taxes. This typically says other, but you can override it to whatever you want it to be. So we call it debts, and there's a small escrow shortage. So we added up all the debts on the credit report, which includes a second mortgage and some credit cards that we're paying off. And then we throw this number in here so they can get a broad view of how much they're saving overall. Okay, so you can see these are all the debts that are being paid off. If we go back to the main screen and shift our eyes over here, this is what they're saving on a monthly basis, the 1330 or 1327. And then they wanted to determine, okay, we want to get this loan paid off because it's almost paid off now. So what would it take to pay the loan off in 15 years? All right. So we determined it would take an extra $715 to pay this loan off in 15 years. So if they pay, okay, instead of 2327, they pay 3042, which is still less than what their total outflow is right now. They're going to have the house paid off in 15 years. And just to do that simply, I'll show you real quick, then I'll stop. In order to do that, you go to analysis and you go to adjust investment strategy. And then you go right here to reduction payment. So how much are they going to pay every month? And it's just kind of trial and error until you get that number. So we determined it was $715 to pay the house off in 15 years. And then again, we just share this data. But again, look what's highlighted. Okay. None of this other stuff up here. This may come back. Sometimes it doesn't come back, but you
Just
just have
refresh
to
it.
refresh. Yeah. Uh, there we go. Care accept disclosure. Yeah, but you can see I'm just focusing on this stuff right here. Okay. I come over here as well. I used to come down to this stuff sometimes, but not so much anymore. So again, just keep it very simple for the client.
Hey, go back to that one screen before where you were just right before this. Yeah. And do you
Yes.
ever unclick? You see that check button where it says this presentation is ready for review? I've been hearing a lot of loan officers that will uncheck that if they're getting ghosted. Do you use that feature?
No, no is right. No, what does that do? I don't
So
even know.
just that if you uncheck it, they go to the next screen, the consumer will not be able to read the report. So
Oh,
a lot
interesting.
of
Okay.
a lot of loan officers will turn that off if they think they're getting
Uh-huh.
shopped, or if they're getting ghosted, they'll be like, you know, they'll unplug it and just say, "Hey, if you want to get your numbers updated or something, let me know and I'll update
Yeah.
it." But I
Yeah.
turned it off. So they use it to create urgency and as a rate shopping,
Yeah,
weapon.
it's kind of funny when you know you're getting shopped. You get the emails. Your analysis has been viewed. Your analysis has been viewed. Your analysis has been viewed
Yeah.
over and over and over.
Yeah. And remember, guys, when the consumer is interacting with the AI bot, sometimes they're asking, "Hey, are these rates competitive?" The more you know, the better. So, guys, you just got a breakdown of an uncommon LO. I mean, he is like delivering an amazing experience. He's making great money. He's getting ready to take that to an even higher level. And I would just say Aaron is future proof. And everything he just did, you guys can do. Real quick, Karen, everyone uses Mortgage Coach for their annual reviews. At least that's the best practice. Recommend
Hmm.
that you do. And I know that Aaron does.
Hmm.
Let's see. Yeah, the TRID being triggered, it depends. In that particular case, he didn't have the specific address. But Mortgage Coach is designed to be a compliant pre-LE experience. And now that doesn't mean that, hey, once credit's been pulled and property's been identified and triggered, TRID has been triggered, it's a great experience for that too. And then I do recommend, when you close the loan, do it he did show like, hey, here's what we did. Sometimes maybe show them like, hey, if you prepaid your mortgage by 100, 200, look what you could do, put a little extra wow on that close, and then do annual reviews, optimize debt and
Hmm.
equity, and you will crush it. Any closing thoughts, Aaron? Anything you want to say before we wrap it up, bro?
Just yeah, I just prefer email with clients. Byron had a question here. It's just that's you can kind of condition clients on your preferred form of communication. When it comes to I do use text and email, just like little quick touches. I'll use text, but yeah, for this mortgage coach, I always use email. But I followed up with a text because if they get an email, they're going to open it up, which leads to another question on their desktop or their laptop, and it'll be easy for them to follow. Whereas if they get a text message with the link to the TCA, they're going to be on their cell phone, and it's a little bit different interface.
Cool. Well, guys, as we close it up, there's a few things I'm doing different in 2026. So one, the format for these Tuesday calls, it's a sales meeting. I'm going to be having a guest and conducting this as a sales meeting like I did today. I just put this in LinkedIn because I started every Tuesday at 8 o'clock. I am posting a newsletter, and my avatar is producing managers because one, they got to kick ass, and two, they're looking for tools and scripts and things to help their loan officers. So every Tuesday, 8 o'clock Pacific, before this sales meeting, we will be publishing this newsletter. Today's newsletter was really just saying, hey, this is what I'm doing. I'm doing these weekly interviews. I'm doing this LinkedIn article that literally is like a playbook for a manager. And then we started the Uncommon LO on Instagram. So this is just 1 minute videos. Like I think today we've got a script coming from Jeremy Forcier that was just awesome in the last week's call. I want to remind people to follow the text Savage Code. I'll be launching that book sometime in the second quarter. And it's just another place where I'm giving value. So, one, make sure you read this post, share it with your mortgage friends. Thanks for coming to the first Tuesday sales meeting. And Aaron, thank you for being the first. Appreciate you,
Yeah,
brother.
thank you guys. Don't let your mind limit what you can accomplish. All right, very powerful tool.
Boom. Let's go.
All right.
Great closing thought.
Thanks, everyone.